Tanvir, over the last couple of months, we have booked some profits across our funds from auto component sector as well as industrials. We still believe that these are medium to long-term buys for the investors. However, given that valuations have been elevated for these sectors, and also we are seeing a little bit of slowdown in terms of automobile demand, we thought that it's better to book some profits. And we have tilted our portfolios a little more defensively compared to where we were a couple of quarters back. And whatever profits were booked, those were moved into segments such as IT services, consumption, and a little bit into banking, where we believe that at least the valuations have not been as aggressive as some of the other segments that I spoke about. And hence, in case of market volatility, probably will have lesser downside risk.
Which sectors are you underweight on at this point, Harsha?
We are still underweight on banking, although it's one of the larger exposures within the funds. We do believe that there are short-term headwinds for banks at this point of time. While valuation perspective, probably it's only segment which is at a valuation which is lower than probably 2019 or 2020 valuations at this point of time. However, there are short-term headwinds. So to that extent, we have been gradually increasing the exposure here, but it's still an underweight in our portfolios.
Okay, and before we go, I do want to get your sense in on how you're reading these early telltale signs of how the festive season will fare in India, which of course will then translate into productivity for the third quarter of this financial year. It's a very important quarter from an economic growth standpoint, consumer driven. How are you looking at the festive season?
It's been a mixed bag at this point of time. And also, if you speak to the companies, it's been a mixed kind of a guidance that we are obtaining. And as you clearly mentioned, this is going to be very crucial for the earnings growth trajectory to remain strong. As it is, June quarter was the slowest from the COVID pandemic period, wherein the profit growth was just about 4% for the Nifty basket. And even September quarter is unlikely to be very strong. And given this backdrop, how we see the volume growth during festive season and also overall profitability growth would be very important for the next financial year, as well as over the next a couple of quarters, how the markets would do. So clearly, it's going to be very, very crucial 3-month period, which is festive period as well.